Hi there guys, testing. This is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy, and this is the training video 13, what markets to assess when trading spot pairs. Now this sort of blends into other videos, but this is something separate all in itself. All I want to show you quickly is pretty much what we're looking for when we're assessing actually spot trading and scalping. So I'm going to go on the economic calendar just shortly. I'm just going to run through this slightly. Now, when you're trading a specific currency pair, whether it be pound dollar, euro dollar, pound yen, euro yen, dollar CAD, Aussie CAD, Kiwi CAD, it doesn't really matter. You have to look at all the factors related to the currency. Now, you've learned this in previous videos. You check out the interest rates, what the policies are by the central bank. What are they looking at? Is it inflation on their mind? Is it growth? What factors seem to be on the central bank's mind? Right now, as of the start of October 2017, for the Federal Reserve Central Bank, for the Fed in the US, it is inflation. That's what is being concentrated on. So you want to look at all factors relating to inflation. Now, one is CPI. Consumer Price Index. Okay, now the CPI data, let's go to the calendar. We had CPI last week in September. So if we go back, I think it was the 28th. Actually, just running this by memory. Oh, it was GDP. It wasn't CPI on that day. But again, GDP is another good one. So you want to always be assured when GDP is coming into play. Again, 30 minutes to an hour before. You do not trade before or just after, but again, always factor in gross domestic product as one of the big ones. I've not got that listed down here, but again, GDP coincides with retail sales, PPI data, job numbers like non-farm or UK job numbers, and inflation data like your CPI. These are the big ones. So again, when assessing inflation, you look at the CPI. Again, if they're looking at growth, the central banks, you look to assess if there are indeed other indicators coming out. Again, like retail sales, PPI, Producer Price Index. What are the manufacturing numbers, just like today? So pretty much, central bank today. We're looking at inflation mainly in the US, but today the US had manufacturing numbers that outperformed. Okay, today's manufacturing data outperformed the market, outperformed expectation. The expectation was 62, it came in at 71.5. And the actual headline number, that was manufacturing prices, is the actual PMI number. 60.8 as opposed to 58.8. So sorry about that. So 58.8 and actual was 60.8. So that outperformed the expected, and that shows good potential growth. Okay. The same with retail sales. What are people spending? What is the confidence like in the market? So you weigh up exactly what is in the headlines, and again, you need to see what's in the headlines to really grab a good grasp. We've gone through this before. Very, very simple. Just check some headlines out. Better news on growth. Again, okay, so these numbers talking about growth now seems to be in the headlines that, markets are factoring in growth numbers, and it's pretty much current to be looking at those types of things. So let's go back. We've assessed that we want to look at things like growth, things retail sales. For that, again, confidence figures as well. Manufacturing, for your inflation, you've got CPI data as well, and job numbers obviously go towards interest rates. If you're looking at interest rates, again, that will coincide with inflation as well. Now, let's look at, these are things you should already be doing. Going by the previous videos, these are things you should be looking at the Forex calendar, assessing right. It doesn't matter what they are in particular, even if they're 3 bulls, 30, 60 minutes before, 30, 60 minutes after, you best not trade, especially if the market has sort of beat numbers or missed projections by quite a margin. It's always best to leave just to see what the settlement sort of number will be, and just to really just edge your bets, but you know, trim the potential losses that could be, and you get in on the wrong side of momentum. So you're already doing that. Always be looking for the big sets of data, as we've mentioned, but looking at these other sets of data, just want to look what you've got to be aware of. Now, NZD, you've got Kiwi, okay? New Zealand dollar. Now, always be aware for, if you're trading this market, I want to look at other sets of data you can look for. And for this, it's the dairy market. Don't forget, they're a huge dairy market in New Zealand. And of course, you know, a lot of their GDP is with dairy, okay? As with other countries, but very big for New Zealand. And of course, other factors relating to the Aussie Kiwi is sets of data from Australia as well. So when you're trading Kiwi, New Zealand dollar, be aware for Australian sets of data as well. You must factor those in, because what affects things in Australia, because both trades of each country are very closely linked, you must factor Australia in as well, because it can always affect and have a knock-on effect into Kiwi itself. I mean, this one here, it's nothing, it's not a major set of data, but be aware when there's an Australian piece of data out if you are trading Kiwi, okay? Right, let's move on. Let's go back over here. Again, so always be aware there's different websites you can check out for dairy information. I think one is AHDB Dairy. You can check out, and it says monthly fuel tracker, monthly farm gate prices, everything you can sort of get, and get a wholesale prices. You can get a grasp of charts on how prices and statistics are keeping up. That is for the UK one. I can get a separate link for the Kiwi one as well. Just email me for that, and there's other things that, you know, that's why I'm here. I can send you all these sort of bits of data as and when you need them. So again, Australian dollar, again, you've got your base metals, copper, iron ore, China, coal, and of course the Kiwi dollar. So let's go backwards on this. Obviously, anything you're trading with Aussie pairs, Aussie dollar, Aussie Kiwi, whatever you're looking to trade, you're then going to go back on yourself and keep an eye out for the Kiwi NZD numbers as well. Like recently, we've just had a New Zealand election. That would be massive if you're trading, obviously, anything Kiwi related, but also anything Australian pair related as well. Obviously, that would affect massively each pair. And even if it's just for the volatility factor, always price that in. And of course, yeah, your copper and iron ore, you know, keep an eye on the indexes pretty much. As to if there's any big announcements in the market regarding these commodities and base metals, and of course any huge China news. So always be out on the lookout for anything live in China. So anything around here you can see. Nothing to do with Japan really, but obviously anything coming up regards the China flag, anything regarding China and the three bulls, any major news out in China, you must be ready to look at it and ready to assess it as and when. Especially if you're trading Australian related, again, because these economies closely correlate, they're closely linked, and they have a lot of trade back and forth each country. Okay, and of course coal as well. You know, anything major with coal in the news, coal index, anything you need. If there's any major shift, be aware that it would affect the price of the Aussie dollar. Okay, or more than likely it could. But again, you don't have to assess all this just before you jump in and out. If you're scalping, just be aware of the huge announcements looking to come out on Forex Live, the one I used. So you don't really need to pay attention to anything else getting in. But of course, if you're looking to trade those pairs sort of regularly on a long-term basis and look to maybe hold trades over several days, weeks, or months, then you must take these into consideration. Now, Canada, anything Canadian related for your CAD pair, just oil basically, anything to do with oil. So anything you look to Forex Live, anything to do with any oil inventory numbers, looking to come to the market, or any bills on oil, or anything at all, always keep an eye out. Let me just go forward to tomorrow, Tuesday the 3rd of October, just to check myself, just to give myself a refreshing look, because I've not checked yet. Yeah, construction PMI due out tomorrow. And again, Aussie related, so if you're looking at trading Aussie or Kiwi dollar, you're looking at the okay, yeah, RBA interest rate decision. So yeah, quite a big deal tomorrow morning. Early hours of this morning, 5:30, I believe that is. At the time hasn't adjusted, and the rate statement as well. So quite a big deal. Obviously, China national holiday, that doesn't matter. But yeah, nothing oil related. Again, no big deal if it was. Just always be aware if you're trading that anything Aussie related. I'm sorry, Canadian related for your CAD. Okay. Right, that's covered there with Canada and the oil. Now, Japanese yen, risk aversion, equities, bonds. So again, Japanese yen, if you're trading this along with just checking your regular high importance announcements, then you're looking at risk aversion in the market. So again, like when there's calamity going on, the markets either go to the reserve, one of the reserve currencies, which is Japanese yen or US dollar. If the US dollar is taking a battering, usually the Japanese yen comes into favor, and that is doing very well. So any pairs Japanese yen related will tend to do worse against Japanese yen, because that will get stronger, because there'll be more of a cash flow, or a flight to safety, as they call it, into pairs and currencies. So currencies such as the Japanese yen, and it still is pretty much one of the world's reserve currencies, top 4, ranked about 3rd place. Now, again, obviously equities as well. Equities doing bad, and I put bonds in there because obviously, you know, huge bonds. It depends what they are. Again, if they're, you know, bonds are doing particularly bad in the US, or some economies just dumped a load of, China's just dumped a load of bonds in America, there's some T30 bills or something like that, then you know, it won't be a good sign in the overall economy, which could end up worse for equities. And that'll have a spill over into, you know, risk aversion, people having lack of confidence in either market, and then will look to flight to safety. Potentially, by default, they wouldn't look to the dollar if that was to happen. They would go look to Japanese yen. So always be aware, if there's any calamities in the market itself, Japanese yen will probably be most probably the stronger pair, unless it's a huge, for instance, huge disaster or something going off in Japan, which they've had over the past several years. In any case like that, then it would obviously affect Japan and wouldn't be good for the overall market or economy. Now, lastly, the Swiss. We've got the Swiss chief here, CHF, Swiss currency. Again, pretty much like the yen, flight to safety. Again, top 4 currencies really in the world. Equities, again, risk off in equities, and the markets, participants in the market are just not fancying it. The risk appetite is dramatically low. You know, potential danger ahead. People always look, you know, investors, top investors, high-end investors always look to the Swiss chief, you know, for a very solid, consistent flight to safety, because this has proven over time to hold its value. And, you know, Swiss markets are what assets Switzerland have, and how Switzerland's run just outside of Europe as well. And again, this is not the Swiss euro, it's Swiss chief we're talking about. So it's the Swiss currency, and markets generally favour that in times of, well, in bad times, shall we say. So equities and risk appetite, again, can kind of include, you know, sort of bonds in this as well, and just general risk aversion, just like the yen. So these pretty much, Japanese yen and Swiss, the chief, pretty much put them in the same basket. Canada oil, Aussie dollar, base metals, and you've got your coal as well, and take into account China, and obviously the New Zealand dollar as well. And Kiwi, New Zealand Kiwi, huge dairy market, and obviously be aware of the Aussie currency as well. And again, there is one, I think there is, check out the live link. I might even get that up now if I can for you and move it across. I usually check out the Global Dairy Market Export Council, that's for USA. If there is one for New Zealand, it shall be pretty much decans.com. Put that on right now. I'll just get that up and I'll put it across, and pretty much can put that across right now. So again, this is only for if you're looking at kiwi, okay? So this is something a little bit different here. So about the New Zealand dairy industry, again, accounts for 3% of the total world production. So it's quite a big deal. Entire world, that tiny, tiny country of New Zealand, accounts for 3% of total world production, okay? And I did say it was quite a lot of account for exports of dairy, and New Zealand exports 95% of its dairy production. So only 5% is kept within the country, and 95% of that is exported. It's quite remarkable. So yeah, and again, when New Zealand's exporting, you know, $12 billion New Zealand dollars worth of dairy products in a year, you know, it's quite a big deal to the market. So this can affect the currency massively if there's a sharp move in either direction of output or anything like that. Doesn't matter to me because I'm a vegan myself. I try not to hold a grudge here, but taking all the personal factors out of it, it's something to keep an eye on, and it's something very much to bear in mind when trading. And taking in factors like this, guys, it really does cement your place in the top trader pile, taking factors like this into account. And yeah, as you can tell, you're already learning a lot more, and you've learned a lot in the last few weeks. And I've already been getting some encouraging emails about, you know, people thinking they would never have factored all this information in before, 6 months ago or even 6 weeks ago, but now seem to be just doing the basics and doing them well, because it's very easy. You've only got to assess a little bit more information regarding your research and your trade analysis, and it pays dividends. So I'll leave it there. It's some great information. Check out that website for trading kiwi pairs, and other than that, it's been a pleasure, and I'll soon be in touch with the training video 14. Thank you very much. Good night.